Guys, what's going on? Welcome to my channel, Millennial Wealth. I'm your host, Miguel, and I'm gonna be guiding you guys to stocks 2020, guys. What are stocks? Why do we need them? Why do we even care about them? And what do I do with them, right? So guys, if you have all of those questions, it doesn't matter if you guys don't have a single stock, right? A single share, and you guys want to learn more about it, that's what I'm here for. There is not such a thing as stupid questions. So if you guys have any questions regardless anything concerning stocks and shares and I don't cover it in this video, please drop it down below and I'll make sure to answer all of those. Also, guys, make sure if you guys are interested into this, into building wealth, into getting out of debt, into making your life a lot easier, not now, but in the future, make sure you guys drop a like and subscribe because we're going to be covering a lot of that. Me, myself, I've been invested in the market for about 8 years in a personal brokerage account and also with a few of my other companies. I have all sorts of investments in across many years. I've done a lot of good plays, I've done a lot of bad plays, and I learned about a lot about all of those, and I'm here to hopefully pass some of that on to you guys. But let's start with the first thing. It's what are stocks, right? So stocks is how I divide the ownership of my company into shares, right? So let's say I own company A and I want to make that company publicly traded to allow you watching right now or me take a little bit of the pie on that, right? So then I said my stock, let's say Miguel's stock, and then I'm going to divide it into 1 million shares and I'm going to sell those shares to you. And you are hoping that my business is doing so well that in the future my business is going to keep appreciating in value, and then you can sell back those shares and get some money back, which is, I guess, what we all want, right? Like, obviously, listen, the only reason to be in the stock market is if you guys want to, to make some money, you want to invest, you want your money to grow across the years, you want your money to help you, guide you into retirement. Maybe you want to quit earlier, maybe you just want more money. I don't know what you want to do, but I'm telling you here what's for. Okay, so let's start easy. What are dividends, guys? A lot of companies you're going to be seeing, they pay dividends. And dividends is no other thing that my company, it's doing so good that I want to give you back a little bit of the revenue we have year after year. And they are usually paid quarterly, yearly, irregularly, not weekly, monthly. It depends really on the company, right? So my company is doing so good that I want to give back to you. So that is what are dividends, guys. Okay, so indexes. Let's talk real quick about indexes because I'm going to be referencing them later throughout this whole video. An index, it's just like a basket, right? Let's say you go to the supermarket and you buy groceries, but groceries, it's not one thing. It's a lot of them in the basket. So, right, I go to the fruit section and I get an apple, a banana, and orange. And then when you put money into that basket, you get a piece of every one of them. In my opinion, right, and Warren Buffett did a massive bet. He bet anyone 10 years that they could not beat the S&P 500 index fund. And he offered $1 million and nobody, none of the big investors that he actually challenged was able to get them. So you're going to see a lot of people that they're going to be able to, by the way, beat the market means that you outperform the S&P 500. The S&P 500 is the basket that has 505 right now, stocks in it, right? Some people can do it 1 year, maybe 2 years, guys, but in the long term, it's almost impossible. Like, right? And I'm not talking about 2, 3, 4 years. I'm talking about in 50 years. In 50 years, it's going to be so hard to outperform the S&P 500. S&P 500 also pays dividends, by the way. So if you just buy that, you have it. And what's the advantage of it? Let's say right now my portfolio, it's my Just Play side portfolio for this videos. It's very heavy on Tesla. If Tesla goes bankrupt tomorrow, I'll lose a lot of money. Let's not think about that. But if you buy all of your money in indexes funds, the only way you lose all of your money is if all 505 of the top companies in the United States, right, go bankrupt. And I'm saying United States because my audience, it's in United States. But if you guys are in other parts of the world, if you have your own indexes, if you guys are in China, you have your own market. If you guys are in the UK, you guys have all of your own stuff. So that's why I'm saying the S&P 500 as the standard. So buying that definitely gives you diversification. It puts money into all of the sectors and it's not divided the same way among all 505 companies, right? It depends on their market cap. So a company like Microsoft that has a massive market cap will have more shares than a little company like, I don't know, Miguel Inc. right here, which is very small. So it's a weighted cap index. I think that's the actual name for it. It's all I invest when it comes to my retirement account. I have 4 indexes: international, like big cap, medium cap, and small cap, and that's all I do. And it has definitely outperformed my side back, my personal play money Robinhood account. So why am I even buying stocks? I don't know, because I like them. I guess Tesla did better than the market, so I did good on Tesla, but that's for another video, guys. Okay, so there are 3 types of main portfolios that people will follow now that we know what dividends are. It's a dividend portfolio. I've seen people that 100% of the shares are nothing but dividend payers, right? And all they do is they get that money and they drip it back, so they reinvest it back into the stocks, or they use it to buy other stocks. So they will not touch a single company that does not pay dividend. Good example of it, let's say for example Triple M. You've seen tapes everywhere that say Triple M in the back. They've been paying dividend for almost 60 years, and they've been growing and growing that dividend. So a lot of people consider that like a massive stock. They've gone through a lot of recessions and they still pay the dividend uninterrupted. So if you guys are dividend investing, that's also a valid strategy. It's hard to say which strategy overall beats the other one, because it depends if you guys are investing in indexes or not. Indexes is like a conglomeration of all of those into ones. But let's go into the second topic, which is growth. Tesla, for example. A lot of people right now, all they buy is Tesla. They buy a company. They don't care if the company pays dividends or not. They are hoping to get earlier into the company, that the company is going to grow a lot. Netflix is a great example, right? Netflix obviously doesn't pay a dividend. A lot of tech companies don't pay dividends for whatever reason. Netflix grew about 40 times, guys, in recent times. So that would have been a massive growth stock. Tesla comes to mind, right? And Tesla this year, by the way, it's early 2020. So I don't know if you're watching this mid 2020 and Tesla has gone bankrupt, I'm sorry. Early 2020, let's take that into account. And then there is like the happy in between, which is a growth dividend, right? You have a company that has a lot of potential to growth, but they also have like a very small dividend that they can up. So Apple, Microsoft, great growth dividend stocks. Why? Because they're still gonna keep growing, right? Apple was one that in 2019 doubled in price. Their dividend is very, very minuscule, but they make so much money that at any point they can start increasing it. Also, if you bought dividends when the shares were a lot lower, and then you're getting a higher yielding on that. So those are the 3 basic portfolios that you guys can follow. You guys don't have to define yourself, and I feel like depending on what stage of your life and what are your goals, immediate goals, mid goals, and end goals, you're gonna change a lot, right? I'm pretty young myself, so I have a lot of growth stocks right now. I'm not that concerned in dividend, but that's me, my risk, my tolerance, and everything on myself. So you guys choose whichever you want, and there is no right or wrong, really. Okay, guys, so let's talk about what is the main component about the stocks, which is my favorite thing that I wish someone would have told me 20 years ago and nobody did. It's compound interest, guys. Compound interest is your absolute best friend, and that is why I'm targeting you all young people. If you are young and you're watching this right now, you have the chance of your lifetime, guys. Nobody told me this. It took me many years of my life, wasting a lot of money. And you guys are not putting any of it for the most part, right? Most of the growth is because of the compounding interest, right? Have you guys heard this saying that, if Bill Gates is walking and he sees $1 down the streets, if he bends over to get that $1, the amount of time he spent getting that $1 is going to cost him more than the money he would have made otherwise? That's not true, guys. This is where that comes into challenge, because if you get that $1 and you invest it in the stock market and you have a long period of time and it starts making interest, and the interest keeps getting interest and interest and interest, that $1 turns out to be like $30 by the time you retire, depending on your age. Stock markets grows, doubles. This is obviously take this with a grain of salt, but your money usually, talking about empirical data, talking about the historical data of the market, will double every 6 to 9 years. Every single time, right? So me, that I'm a person that I'm in my 30s, right? I don't have as much time to retirement. I have about 35 years, so I have 4 cycles of doubling If you are watching this right now and you're in your 18s, mid-20s, you have an extra cycle of doubling, guys. And that is what you have to take the most advantage. Any dollar you put while you're young, it's gonna grow exponentially. It's ridiculous, guys, ridiculous. Go right now and search any compound interest calculator right there. Put anything, right? Even putting $100 a month, if you're in your mid-20s, in your late teens, guys, it's ridiculous. It's ridiculous, and I wish someone would have got like a calculator in front of me and would have shown me this 20 years ago, because I wouldn't be here. I would be like on the moon, I don't know, flying to Mars right now. So with that comes the time, right? The more time you have, the more time the money will work for you. The other thing is, now since we're talking about time, is timing, guys. Absolutely nobody knows what's going to happen in the stock market. If anyone knew what was going to happen in the stock market, they first of all, they wouldn't tell you, right? Obviously, why would they tell you? And if you watch the news and you see a lot of these analysts, like I saw one this morning that the guy said that we have a 48% chance of going into recession in 2020. It's like, I wish at my work I could give 50-50 answers to things and still keep my job. Can you imagine if somebody asked you something and you gave them a yes or no, a flip a coin pretty much for the most part? Nobody knows what the market's gonna do, guys. And in my time, right, I'm not big in timing the market, but if you have time, you really don't have to time the market. If you just invest consistently, that is going to be 80% of the hard work. Just getting that extra $100 a week, $200 a month, whatever you can do, right? We're not here to be millionaires. We're here to be wealthy. Whatever wealth means to you, it's different than wealth means to me. So you have to set your own expectations and your own goals. But time, it's the most important thing, not timing. That is my personal opinion, and time after time that has worked out for me. Right now, right, early 2020, the market is in the highest it has ever been. So it doesn't matter at any point that you would have bought in the stock market before this moment that I'm recording this, you would still make money. Doesn't matter. You could have invested at the top of 2008. You could have invested at the bottom. You could have invested at any point yesterday. Well, even when the market closed the last week, and you would still be on top, because right now the market is at the highest it has ever been. So this thing about, oh, the market's gonna crash, wait. If you guys have 5 years, for the most part, you'll be fine. The market will go up. The market will go down. If you have 5 years, I think the times that in a 5-year span the stock market has been lower than when it started, it's less than 90. It's less than 2%, by the way. So not 3 years. If you have 5 years, the odds are you are fine no matter when you're buying, guys. Okay, so there's 3 types of investing I think that most people will do. There's the long-term investors like me. I buy stocks and I think in terms of years, right? I'm gonna own this for 1 year, 5 years, 10 years. I don't care what the earnings are next week. I don't care how much money the company makes. I'm buying you. I want you. You stay in my Robinhood. You stay in my Fidelity account, and you're never getting out of there. In my Vanguard card, you're staying there forever, guys, right? Then we have the day traders. Day traders, in my opinion, the most dangerous one. This is people that they buy and they sell in seconds. They buy something right now and they sell it in an hour, in 15 minutes, 5 minutes, and all they want is a 0.01 increase, and they make like a 1% on their money, and they keep doing this and this and this, and they make some profits. I would recommend against that, but I don't think nothing good will come from that. And yes, you're gonna see some people that made a lot of money, but remember, the people that are losing the money, those are the ones that are not talking. So I don't recommend that one. Stay away from that one. And then there's swing trading. I've done swing trading in the past. I don't do it that much because it's taxes and there's too much risk. But that's when I buy a stock because I know that they have earnings upcoming and I know they're going to be doing really, really good. So I just buy them, right? And I sell them maybe a month, 2 months afterwards. You have to pay like the amount of taxes you pay. For the most part, it's I don't know, guys. I don't think it's worth it. But if you know something and you have a big hunch about something, why not doing it, right? I mean, worst case scenario, let's say it doesn't go up in the in that month you want it, you can keep holding it forever until hopefully it does, unless it's a crappy company, and then you're like me holding 400 shares of rice. Okay, so where do I buy this stocks? This random dude on the internet has been yelling for 10 minutes. You're in luck, because it's easier than ever to buy stocks. When I started buying stocks, it was only with E-Trade for the most part, and you had to mail checks You have to mail checks. Holy crap, how old am I? Anyway, right now, guys, my favorite ones, it's Robinhood. It's 100% free. It was the first one to be free, right, in a mobile app, I think. Other ones, they had requirements that you have to have X amount of money and whatnot. But there's a lot. There's Robinhood, Webull, Fidelity, Charles Schwab, Vanguard, M1. It's nonstop, guys. Even I think it's nonstop, right? I have 3 different ones because I have some from my work, guys. If you at work, if you have like a 401k, if you have like a Roth IRA, you guys can also open your own IRAs and 401ks and personal, depending on what's available to you. However, if you just want to buy a few stocks on the side by yourself and not worry about retirement. I don't mix my retirement with my trades. All my retirement, it's set in index funds, and it's going to stay in index funds for the next 50 years. And I'm fine and I'm happy with that. I'm not going to look at that. I'm not looking at that. That's over there, and I don't care about that. I use personally Robinhood. I think they're such a great, they're so great. And they're going to keep coming up with more and more features. I'll put a link in the description. If you guys don't have Robinhood, you can use my link. I get a chair, by the way. You also get a chair. It's usually from $3 to $5. I got a Microsoft one time, but I don't think I'll get any more. But it's easier than ever. You literally go, you connect your bank account, swipe twice, buy it, and you're done. So now this is me. I'm just gonna do a quick stop right now in this video because right now you guys are fired up. I want to get in Robinhood. I'm gonna buy Tesla. I'm gonna be rich next month. Let's put a quick pause, guys. Personally, and this is just me giving you all a big recommendation here. You guys do whatever you want. You're adults. By the way, you have to be 18. So I'm guessing that if you guys are buying stocks, you're adults and whatnot. You have to be very careful. Don't buy stocks if you guys are in debt. Because unless you guys have some insider information, which by the way, it's super illegal and you go with Martha Stewart to jail, stocks are not, for the most part, they're going to skyrocket, right? 2019 was a massive year, almost record breaking. The market almost went up 30%. Market's not going to go up 30% every single year, right? And it's very likely that if you guys are in your 30s, 20s, by the time you guys retire, the market's going to crash like 4 more times. So it's just going to happen. So don't go right now, because a lot of those I have one of my retirement accounts. It actually allows me to plug in my credit card when I had one, just to buy stocks with credit, guys. I would suggest against that. Market's not going to go up that much. If you guys have debt that has more than 5% interest rate, pay that first, because odds are once you get rid of all of that debt, then you're going to be able to hit all of your stock, all of your retirement, all of your investing harder than ever. So don't try to juggle 2 things at the same time. If you have a lot of credit card debt, I would suggest attack that first, because the return you're going to get paying the credit card is going to be way higher than anything you're going to get on the stock market, unless you know something I don't. And if you do, don't let me know, because I don't want to go to jail. Because remember, what we were talking about, compound interest, it also works against yourself, right? So if you have a credit card debt and you are compounding that negative interest, it's going to come and bite you in the butt. So, that's just me putting my dad hat on and kind of giving you a little bit of a lecture here. And now my last thing, just to finish all of my little nagging here, guys, there's 2 other things which are known as the dark side of investing. I'm gonna suggest everyone watching right now, if you are brand new to the market, don't mess with them. If you are not new to the market, don't mess with them either. Because they are the way people make millions overnight, or people lose everything overnight. It's just gambling at that point. It's called option trading. It's too advanced right now. If this is an intro course to investing 2020, I don't want to get into it. I can do another video later if you guys care. But it's betting on the stock market that by this day, this stock's going to be here or here. And if it happens, I get a lot of money. If it doesn't happen, I lose a lot of money. And then the second one is margin. You can leverage your portfolio. So let's say you have a $10,000 portfolio. Some companies, depending on what you're holding on those $10,000, will say, well, since you have $10,000 here, I'm going to give you $10,000 of play money that you can invest and buy whatever you want, and we're going to charge you an interest rate from 5% to 10%. It's nothing different than just a fancy way of saying a credit card on the stock market. I don't recommend it, because what happens is, let's say you spend all those $10,000 of margin into stocks, and the stocks crashes right away, now you have stocks that you cannot sell. You cannot sell back unless you sell back at a loss to pay for your interest things, and you're gonna be compounding that interest that you just spent getting that. So I would 100% recommend against doing that, both option tradings and margin trading, unless you guys know what you're doing, unless you guys are not scared. I'm scared. Especially if my wife finds out. If my wife finds out about that, I'm going to be in so much trouble that I don't mess with those two. So anyway, guys, I'm going to wrap it up for this episode right now, guys. Let me know down in the comments. Do you have any other question? And listen, stock market is super complicated. There's a lot of things that you look when analyzing stocks to buy and not. But if you guys are intimidated by it, buy index, like just get in the S&P 500. I buy a lot of the SPY. And by the way, this is whatever. I always make fun of YouTubers when they say, this is not financial advice. But, don't buy anything you don't understand. That's going to be probably my most important advice. And I don't know why I waited all the way to the end. But don't put your money into nothing you don't understand. Make sure you guys have a little bit of a grasp on it before you do. But, the earlier you do, the better. I buy a lot of SPY on my personal account, which is just like an S&P 500 index. But if you guys, I also buy companies that I know, that I see, that I know what they're doing, that I know what their business is, because that's, if I can understand it, it makes a lot more sense for me, right? If I see that my wife rigged something home and she said that it's the latest and the greatest, like Elf, she bought like something with Elf and the company did really good. So, make sure that you guys are keeping attention, make sure you guys are reading on the news and whatnot, because that's going to give you a huge insight. But don't be intimidated by it. It's way easier than you think, and don't wait, right? Unless you have debt, work through that. But if not, guys, don't work. Start investing as early as you can, because it's gonna pay off big time. But anyway, guys, I'm gonna wrap it up here. Make sure you guys drop a like and a subscribe, because I'm gonna be going in depth into my portfolio and some stocks and whatnot. So hopefully you guys enjoy. But anyway, guys, I'll catch you all later. Bye.